Is my volume proper? Hi children. We'll wait for 2 or 3 more minutes so that we can start the session. Good. Very good. Good. I am fine. Pakka, absolutely fine. Now is it okay? Okay. Breathing sound கம்மியா இருக்குதா? ரொம்ப லோவாக இருக்கா? டாய், இப்படி வச்சா ப்ரீதிங் சவுண்ட் வருதுங்கிற, இப்படி வச்சா ரொம்ப லோவாக இருக்குண்ணே. மூச்சு விட்றதா வேண்டாமா? Right. Good. So good reviews about the examination. But as I promised, I will not ask you about the examinations. Okay. Right. So today, as per the advice of Suman sir and Jason sir, this is also getting live streamed in YouTube. So YouTube pasang also can watch this. So welcome YouTube students. Right. Now let's start. Ready? So Negotiable Instruments Act led to minimum 10 marks in the examination. What I speak is about the theory component itself in the examination. The direct component itself in the examination is for 10 marks, which means MCQ added up nearly 13 to 14 marks one can score in this negotiable instruments. Before this, I had also put for you one session on Companies Act covering deposits, dividend accounts, session number 2 covering on the balance portion of accounts, audit, share capital, meetings, substantial part of meetings. So this alone would come to not less than roughly 40 marks. So I am planning for another 20 marks coverage today, in all amounting to roughly 60 plus marks. So the 60 plus marks is in your pocket. Maybe by the beginning of tomorrow morning, you spend another 2 plus 2 4 hours to revise what was done in the previous session. So maybe by tomorrow morning, 10 o'clock or 11 o'clock, either you study today night or you study tomorrow morning. By 10 11 the 60 marks it should be in your pocket. So balance, the next focus you should lay on the types of companies, the leftover areas in meetings. So this is the next the priority which you should give. So that will come to not less than 65 plus to 70 marks. Then your focus should be on to this prospectus, then the share allotment, kutti topics. Prospectus alone is a big topic. Balance are all kutti topics. Maybe I will recommend, if you have already studied, kindly study this General Clauses Act and interpretation of statutes. If you have already studied, so kindly study that on the the first half of the day of examination, so that there are certain by heart things which needs to be done. So if you read it by then, if you study it by then, maybe that will be more advantageous for you. It will stay in your mind. Hopefully, I am telling what I would have done had I been in your case. Sir, here afterwards only I am going to start what is General Clauses Act and what is interpretation of statutes. I think it is better not to cover them, because they are all definitional aspects which you need to memorize. So the loss may be some 10 to 12 marks, but 88 marks if you are thorough, or rather than focusing on those 12 marks or the 13 marks, if you are focusing on the balance 88 marks, and if you are going to read that thorough, then hands down you should be able to score 65 plus 70 plus marks in the examination, right? So with that, let me start. So Negotiable Instruments Act. So this is one of the challenging topics, but we shouldn't think that it is any more challenging for us. It is an easy topic for us. Anyways, a quick revision. I'll try to cover this Negotiable Instruments Act in an hour's time. Then in the next hour, I'll try to cover this Indian Contract Act. Right. So let's start. So basics of the negotiable instruments. So first is the definitional aspect of this promissory note, the bill of exchange, and the check. So before that, section 13 of Negotiable Instruments Act says three negotiable instruments are there. What are they? The promissory note, the bill of exchange, and the check. So there are three negotiable instruments which are covered under the Negotiable Instruments Act. One is the promissory note, the other one is the bill of exchange, the other one is the check. So this is given in section 13 of the Negotiable Instruments Act. Now, some important aspect of negotiable instrument. Negotiable instrument is transferable. How many times can that be transferred? It can be transferred infinite times. Transferee gets a better title than the transferor if he is a HDC. I will be using no acronyms here and there. So HDC refers to holder in due course. HDC refers to holder in due course. The very popular example, Mr. X, he gives a promissory note of rupees 5 lakhs to Y. How did Y acquire this check? Y acquired this check by way of fraud. So which means now Y is having a defective title. What is Y doing? Y endorses this. To whom? To Mr. Z. Who is Mr. Z? He is a holder in due course. Now Mr. Z will get a good title. Who is a holder in due course definition? We will revise in a short time. So basically understand the characteristic feature of negotiable instrument is that the transferee will always get a better title than the transferor. The transferee will always get a better title than the transferor if the transferee is going to be a holder in due course. If the transferee is going to be a holder in due course. If he is going to be a mere holder and all, that concept will not apply. Only if he is a holder in due course. So quick recap. Number 1, we discussed section 13 of Negotiable Instruments Act. 3 negotiable instruments: promissory note, bill of exchange and check. Negotiable instruments can be transferred any number of times. Number 2, the transferee always gets a better title than the transferor if and only if he happens to be a holder in due course. Then the 3 important the negotiable instruments which is covered under section 13. One is promissory note, the other one is bill of exchange, and the other one is check. So let us go one by one. What is meant by promissory note? So I have not given the definition, I have just taken up the features alone here. So number 1, to call something as a promissory note, it should be an instrument in writing. To call something as a promissory note, number 1, it should be an instrument in writing. Number 2, so which means you will get questions like whether oral promissory note is a promissory note or not, like that and all. You will get questions. Please do understand the oral promissory note is not to be regarded as a promissory note. So number 1, promissory note is an instrument in writing. Number 2, there should be an undertaking to pay. What is meant by undertaking to pay? Undertaking to pay ka matlab promise to pay. There should be a promise to pay. Unless there is a promise to pay, you cannot call it as a promissory note. So we should understand that there is a difference between a promise to pay versus a acknowledgement to pay. What is that? An acknowledgement of debt. What is meant by acknowledgement of debt? Acknowledgement of debt means you are telling yes, I should pay, but you are not telling I will pay. You are not telling when you will pay. Nothing is mentioned. I owe you, I should give you money, like this. Then you call it as an acknowledgement of debt. An acknowledgement of debt is not to be considered as a promissory note. A mere acknowledgement of debt is not to be considered as a promissory note. This is one fine point which you have to remember. Then there should be an unconditional undertaking, which means there should not be any conditions which is attached to the promissory note. There should be an unconditional undertaking ka matlab there should not be any conditions which are attached to the promissory note. Now 2 fine points which is to be understood. Number 1, where there is going to be a promise to pay on the lapse of a certain period, where there is going to be a promise to pay on the lapse of a certain period. After some time, I will pay you after 3 months, 4 months, 5 months. This is also a condition, but this is certain to happen. But this is certain to happen. Or on the happening of a specified event which is certain to happen, it should be considered as a valid instrument, though the time of its happening may be uncertain. For example, on the occurrence of a specified event means the most popular example, or maybe even the only example, is death. So upon death of a person, I promise to pay you so and so. So is this a promissory note? Yes, this is also a promissory note. Is this a promissory note? Yes, this is also a promissory note, because death is certain to happen. You and I cannot stop death. Death is certain to happen, though the time of its happening may be uncertain. So unconditional undertaking means the couple of points which you should remember is where if it is going to be paid after a time, or on the happening of the death of some person, then it should be considered as an valid promissory note, even though there is some condition attached. In other cases, it is not a valid promissory note. Shall we progress up? Right. Then it should be signed by the maker. Next, it should be signed by the maker. Obviously, any instrument is valid only if it is signed by the person who is making. In promissory note, the person who makes the instrument is called as maker. The person who makes the instrument is called as maker, and the person to whom it is paid is called as payee. It is called as payee, and it should also be stamped, and it should be a promise to pay a sum of money only. It should be a promise to pay a sum of money only. So the questions will come. I promise to pay you 10,000 rupees plus cow, 10,000 rupees plus buffalo. Like this, all these things will come. So you should understand that it is not a valid promissory note because it should be a promise to pay a sum of money only. And such sum of money should also be a certain sum. It should also be certain sum. I promise to pay you 10,000 and all the other sums which may be due, like this and all, if it comes, it is not a promissory note because it is not a certain sum and it is payable to the order or bearer. First, we should understand what is meant by order and what is meant by bearer. If the name of the payee is mentioned, then it is to be considered as an order instrument. If the name of the payee is not mentioned, then it is to be considered as a bearer instrument. Or if the instrument specifically they have mentioned that it is a bearer instrument, then also it is to be considered as a bearer instrument. If in the instrument specifically if it is mentioned that it is a bearer instrument, then also it is to be considered as a bearer instrument. Are you all following this discussion, everybody? Everybody? Right. So, however, as per section 31 of the RBI Act, no person can issue a bearer promissory note. No person can issue a bearer promissory note. No person can issue a bearer promissory note as per the RBI Act. No person can issue a bearer promissory note as per the RBI Act. So, anyways, bill of exchange I have given there separately. So, no person shall issue a bearer promissory note. Nobody should issue a bearer promissory note. Which means only RBI can issue a bearer promissory note. Nobody else can issue a bearer promissory note. Apo, any promissory note for that matter can only be an order promissory note. Mr. So-and-so gave a promissory note without mentioning the name of any person means. So, first you should understand that it is a bearer promissory note. Number two, you should understand because it is a bearer promissory note, it is not valid. Because it is a bearer promissory note, it is not valid. Shall we progress, everybody? So, to consolidate, what are all the features of promissory note? Number one, it is an instrument in writing. Number two, it contains an undertaking. Undertaking means promise. Number three, it contains an unconditional undertaking. What is not to be considered as unconditional? What is not to be considered as conditional? Or what can be permitted in the case of unconditional, which is no payable after some time, or which is payable on the happening of an event which is certain to happen, that is death. Death of some other person. Death of some other person. The next point to be understood is that it should be signed by the maker and it should be stamped, and there should be a promise to pay a certain sum of money only, and it can be payable to the order only. It is not payable to the bearer. It is not payable to the bearer. Right? So, these are all the features with respect to promissory note. So, some small kutti examples which we have already done in the classroom. I acknowledge myself to be indebted to B for rupees 10,000. So, this is only an acknowledgement to pay. This is not a promissory note, right? This is not a promissory note because this is only an acknowledgement to pay. A mere acknowledgement to pay is not to be regarded as a promissory note. I acknowledge myself to be indebted to B for rupees 10,000 for rupees 1,000 to be paid on demand for value received. To be paid on demand for value received, which means what? I will be paying that on demand for value received, which means there is a promise to pay. I am telling I will pay it on demand, which means there is a promissory note. So, this is a valid promissory note. Why? Because there is a promise to pay. Why is this a valid promissory note? Because there is a promise to pay. Okay, I promise to pay B rupees 500 on D's debt provided D leaves me enough sum to pay that sum. Okay, on D's debt is certain, but provided that D leaves me enough sum is uncertain. Therefore, this is not a promissory note because there is a conditional undertaking. There is a conditional undertaking. An instrument that reads, I promise to pay rupees 1,000 to be 30 days after his marriage with C. So, anything which is going to happen in future is uncertain. There is only one thing which is certain, that is death. There is only one thing that is certain, that is death. So, therefore, this is also not a promissory note because it is a conditional undertaking. There is a conditional undertaking. Clarity is there. Shall we progress, everybody? Okay, next is bill of exchange. Right? A bill of exchange is again an instrument in writing which is containing an unconditional order. See the keyword with respect to bill of exchanges, you should use the word order. For heaven's sake, my dear children, no, don't write there as undertaking or there as order and here as undertaking. Undertaking is the keyword there and order is the keyword here. Understood? And it should be signed by the maker, directing a certain person to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. So the keyword, two keywords which you should use in the case of bill of exchange is that number one, there should be an unconditional order to pay. Number two, it should be directing a person to pay a certain sum of money. These are keywords. These keywords you should not know transpose, or you cannot use it as per your own whims and fancies. Okay, there should be an order to pay. Number two, there should be an undertaking. Sorry, there should be an order to pay, directing a person to pay a certain sum of money. Balance all are same. So there are three parties to a bill of exchange. One is the drawer, the other is the drawee, the other is the payee. I draw bill of exchange on you. I am the drawer. Generally, the drawer will be the creditor. The drawee will be the debtor. The payee can be either the creditor or some third party. The drawer will be the creditor, the drawee will be the debtor, and the payee can be some third party. So I have supplied goods to you, I need to receive money from you, I draw a bill of exchange on you. Right? However, as per 31 of Reserve Bank of India Act, no person shall issue a bill of exchange payable to a bearer on demand. Closely follow. Promissory note. Bearer promissory note prohibited. Bearer bill of exchange is not prohibited. Bearer bill of exchange payable on demand is prohibited. Bearer bill of exchange payable on demand is prohibited. You should be knowing that the instruments are two in number. One is demand instrument, the other one is time instrument. One is demand instrument, the other one is time instrument. So, if it is going to be a promissory note, it cannot be a bearer, it cannot be a bearer promissory note payable on demand. It cannot be a bearer promissory note payable after some time. But in the case of bill of exchange, it cannot be a bearer promissory note payable on demand, but it can be a bearer promissory note payable after some time. After 3 months, after 3 months, I direct you to pay Mr. So and so on demand. I direct you to pay Mr. So and so on demand a sum of rupees so and so. Like this, if I say this is a bearer bill of exchange which is payable on demand, this is not valid. If I say after 3 months, please pay the bearer a sum of rupees so and so, it is valid. Are you all following? So you should just right. So in the case of promissory note, bearer you will mark it as invalid, whereas in the case of bill of exchange, if it is bearer, you ask the question whether it is bearer which is payable on demand or which is payable after time. If it is going to be a bearer which is payable on demand, it is not valid. Bearer payable after some time, then it is valid. Are you all following the discussion, everybody? Right. Now, a check is also a bill of exchange which is drawn on a specified banker. Always keep in mind, the case of a check, the drawee will always be a bank. The drawee will always be a bank. The drawee will always be a bank. Everybody? In the case of check, the drawee will always be a bank. And it is not expressed to be payable otherwise than on demand. If you cannot remember this, if you are in no position to remember this, just tell that a check is a bill of exchange in which the drawee is a specified banker and always it is payable on demand, and it includes the electronic image of a truncated check and a check in an electronic form. So what is a check in an electronic form? The check is drawn in an electronic form using any computer resource and which is signed in a secure system with digital signature. So generated electronically using a computer resource and signed in a secure system with digital signature. Truncated check, which is truncated during the course of clearing cycle, generating an electronic image which substitutes the further physical movement of the check. So in the case of truncated check, it is a paper check which is subsequently truncated. Simply you can understand which is subsequently scanned. That is what you call as truncated check. On the other hand, in the case of a check in an electronic form, it is generated electronically, signed electronically, transmitted electronically, everything is electronic. Okay, so crossing. So as far as crossing is concerned, first write what is the definition of crossing. Crossing means where it bears across its face two transverse parallel lines, it is called as crossing. Crossing generally means an instruction from the drawer to the bankers. It is an instruction from the drawer to the bankers. Two types of crossing broadly. It can be a general crossing or it can be a special crossing. If I just mark this with or without the words, then it is called as a general crossing. General crossing, simply 3 points. It is a direction by the drawer to the paying banker. The drawer is telling to his bank. Okay, don't pay the amount across the counter, pay it only through a banker. The drawer is telling to his bank, don't pay the amount across the counter, pay it only through a banker. Special crossing, the drawer, no, he is telling to his bank, don't just don't pay it across the counter illa ide. You should also pay it only through the banker whose name is mentioned here. Which means, say for example, I am giving a check to Mr. Suman, and in the check, no, it is mentioned in the crossing as SBI. Which means I hold an account with the IOB bank. I am giving an instruction to IOB bank. IOB bank, if Suman comes across the counter to you, don't make the payment. If Suman comes through some other bank also, don't make the payment. Make the payment only if Suman comes through State Bank of India. Which means now Suman can deposit the check only in State Bank of India. This is called a special crossing. Which means 3 points you should write for certain with respect to general crossing and special crossing. What are all the 3 points which you should write? General crossing, it is an instruction by the drawer to the paying bank. What instruction? 2 instruction. Number 1, okay, don't pay the amount across the counter. Then how to pay? Pay it only through a banker. In the case of special crossing also, instruction is from the drawer to the paying banker. What he says, don't pay the amount across the counter, pay it only through the specified banker. Now, you cannot do special crossing in favor of more than one banker. You cannot do special crossing in favor of more than one banker. Any special crossing which is made in favor of more than one banker, it is invalid. However, there is one exception. When you specially cross it in favor of a banker, that banker can send it to his agent for collection. This is the only exception where 2 times special crossing is permitted. Where you know, I give a check to Suman mentioning State Bank of India. Now State Bank of Suman deposits in State Bank of India. State Bank of India is crossing it in favor of his agent, say for HDFC, and now 2 times special crossing is possible. This is the only case where 2 times special crossing is possible. Okay. From the question you can infer this. Okay, from the question you can infer this. So for special crossing, 4 points you should remember. What are all the 4 points? It's a direction from the drawer to the paying banker, not to pay across the counter, but to pay only through a specified banker. Now, the point number 4 is that, okay, 2 times special crossing in favor of more than one banker is, come on, invalid, except when the banker in whose favor it is specially crosses it in favor of his agent for collection. I specially cross it in favor of a banker. He specially crosses it in favor of his agent. This is the only time 2 times special crossing is possible. Are you all following? Okay. So general crossing and special crossing is over. The next crossing is, come on, account payee crossing. What is this account payee crossing? Account payee crossing, okay, in addition to the normal crossing, you add the words account payee, which means you are using the word account payee like this, which means here there are 2 instructions to 2 different bankers. What are all the 2 instructions to 2 different bankers? This line refers to that, no, you are telling to your bank, that is your bank means the bank where you are having an account, where the drawer is having an account, don't pay the amount across the counter, correct? He is telling don't pay the amount across the counter, correct? Number 2, account payee, you are giving an instruction to the collecting banker, the receiving banker, you don't collect this check unless this fellow happens to be your customer. Which means if I make a crossing like this and if I write account payee and Suman is going to deposit it in State Bank of India, I am telling to State Bank of India, don't collect this check for Suman unless Suman happens to be your customer. Which means I am telling to State Bank of India, collect the amount, credit the amount to Suman's account. This is as account payee crossing. This is account payee crossing. So this is a direction to the receiving banker. This is a direction to the receiving banker, or what you call as, come on, the collecting banker. What is the direction which is given to the collecting banker? That, okay, the proceeds of the check shall be credited directly to the account of the payee. The proceeds of the check shall be credited directly to the account of the payee. This is what you call as dash crossing. This is what you call as, come on, account payee. See, account payee is actually a deviation from the normal crossing rule. Normally, I can give instruction only to my bank. That is where I am having an account. In account payee, I am giving an instruction to the collecting bank. You don't collect this check unless the payee happens to be your customer. Unless the payee happens to be your customer. Clarity is there. Shall we progress? Then, not negotiable crossing. Okay, this not negotiable crossing is a deviation from the original rule what we told. What was the original rule which we told? The transferee gets a better title than the transferor, we told, correct? The transferee gets a better title than transferor, we told. But if there is going to be a not negotiable crossing, the transferee will get only the same title as the transferor. The transferee will get only the same title as transferor. I continue with that example. X gives a check of rupees 5 lakhs to Y, marked this as not negotiable. This facility is there only in crossing. Y, how did he acquire the check? By way of fraud. When Y is going to acquire the check by way of fraud, you tell me friends, Y is going to have a dash title, Y is going to have a defective title, right? Now what is Y doing? Y is transferring this check. What is Y doing? Y is transferring this check to Z. Now when Y is transferring this check to Z, imagine that Z is a holder in due course. Nyayama, as per the first the page what we discussed, you will be telling that no, he will get, Mr. Z will get a good title, right? You will be telling that Mr. Z will be getting a good title, but please to understand in this case, Mr. Z will not be getting a good title. Mr. Z will be getting only a defective title. Mr. Z will only be getting a defective title. So always don't get carried away by this holder in due course. Anything is possible for holder in due course. No, in case of not negotiable crossing, the holder in due course will not get proper title. The holder in due course will not get proper title. Clarity is there? Everybody? Right. So we are discussing about dash crossing. We are discussing about, come on, not negotiable crossing. We are discussing about dash crossing. We are discussing about not negotiable crossing. So in the case of not negotiable crossing, no, this defies the normal rule of crossing, that is the normal rule of negotiable instrument. So in case of not negotiable crossing, the transferee will get only the same title as the transferor, even though the transferee happens to be a holder in due course, even though the transferee becomes the holder in due course. Are you all following, pa? Everybody? Right. Okay, now we have to understand the definition of holder, holder for value and holder in due course. So holder means two conditions are to be satisfied. Number one, he should be entitled to the possession of the instrument in his own name, and he should be entitled to receive and recover the amount mentioned in the instrument. So two things you should know, keep in mind: entitled to possess, entitled to receive. Entitled to possess, entitled to receive. Entitled to possess, entitled to receive. These are the keywords. Apart from these keywords, if you write any other word, okay, which is different from what is there in the key, then no, the key konja kaindrum. So you should write these words. Okay, he is entitled to possess and he is entitled to receive. Are you all having clarity? Shall we progress up? If these two entitlements are there, then you call him as a holder. If the same holder has also acquired the instrument for consideration, he is a holder for value. If he is acquired the instrument for a consideration before maturity and in good faith, then you call him as a holder in due course. So holder is equal to entitled to possess plus entitled to receive, plus if there is going to be consideration, he is called as a holder for value, plus if it is going to be before maturity and in good faith, is called as holder in due course. Good faith means he should not have known if there is any fraud or something which has happened before the instrument came into his hands. Before the instrument came into his hands, if some fraud or something had happened, then no, this fellow does not know means then he is called as a holder in due course. He is called as a holder in due course, or whom we call as an innocent person, but examination don't write as innocent person. You call this fellow as holder in due course. Clarity is there? Right. Super, super. Then next, an important point is that generally holder in due course, he gets a better title than the transferor. He gets a better title than the transferor, and not only that, all the prior parties are liable to the holder in due course. All prior parties are liable to the holder in due course. Nobody can deny their liability towards holder in due course. Nobody can deny their liabilities to holder in due course. Everybody is liable to holder in due course because he gets a better title than the transferor. Nobody can deny their liability to holder in due course. Clarity is there? Okay, now the key point here is that if anybody is deriving title from holder in due course, they will also get the same title as holder in due course, except when that fellow is a party to the fraud. Except when that fellow is a party to the fraud. So say for example, same illustration. Y is a fraud. From Y the instrument goes to Z. Imagine Z is a holder in due course. Z endorses this instrument as a gift. promissory note vechkoyen. Z endorses this instrument as a gift to A. Now tell me, what is the title of Z and what is the title of A? What is the title of Z and what is the title of A? My dear children, the title of Z is, he is having a good title, right? He is having a good title. Why is he having a good title? Because no, exceptional cases tavara, except in the exceptional cases, in all the other cases, the holder in due course, come on, he will always have a dash title. The holder in due course will always have a good title. The holder in due course will always have a good title. Now Mr. A is acquiring this as a gift. Abdinal Mr. A is not a holder in due course, he is only a holder. He is only a holder. Because is he entitled to possess the instrument? Yes. Is he entitled to receive the instrument? Yes. Therefore Mr. A is only a holder. He is not a holder for value. He is not a holder in due course. Correct? But still A will also get a dash title. A will also get a good title. A will also have a good title. Are you all following up? So anybody who is getting title after holder in due course will get the same title as holder in due course. Or exception. What? X is there. Y is there. Y is a fraud. Y to it goes to Z. Z is a holder in due course. From Z again it is going to Y. If now holder in due course will get a dash title. Tell me. Holder in due course will get a dash title. Holder in due course will get a good title. Do you agree? Holder in due course will get a good title, right? But Y will get only a defective title. Why Y will get a defective title? Because he is the person who did the fraud. Which means if any person is deriving title from holder in due course, he will also get the same title as holder in due course. In an exceptional case where if the same party to the fraud is deriving the title from holder in due course, but he will get only a defective title. Shall we progress up? Right? So quick. Okay. See, most of the questions are either of two types. Whether he will get proper title or not. This is a set of questions. The other question is, what is the liability of the bankers? Paying banker is liable, not liable. Collecting banker is liable, not liable. This is a broad classification of the questions mainly. If you are lucky, you will get the other things like types of negotiable instruments, order instrument, bearer instrument, demand, time. No, if your horoscope is good, you will get those. Are you all following? Can I proceed? Right. So anybody deriving title from holder in due course will get only the same title as holder in due course. Anybody deriving title from holder in due course will get only the same title as holder in due course. No, except in a case where he is going to be a party to the fraud. See, this is just for your memory purpose. This is just for your for you to strike in the examination. Always don't think that holder in due course na super title. Don't think. In the case of not negotiable crossing, holder in due course or the title is defective only. In the case of not negotiable crossing, holder in due course title is defective only. Similarly, if the signature is forged means imitating the signature of a person, faking the signature of a person, it is called as forgery. So if the signature is forged, then also the holder in due course will not get a good title. So the first thing, when you look into the question, you should first identify whether he is a holder in due course. Next, you should check whether there is a not negotiable crossing or forgery. Fraud and forgery, don't confuse. Fraud is different. I tell some false information, I make you sign. That is fraud. Forgery means I don't give that pain to you. I myself put your sign. That is called as forgery. So holder in due course will not get a proper title. No, in the case of number 1, not negotiable crossing. Number 2, in the case of forgery. I repeat, holder in due course will not get a proper title in the case of a not negotiable crossing and in the case of forgery. Are you all following this discussion? Everybody? Right. Okay, this is again something which we have done, but quick. X obtains a check drawn by Y by way of gift. Okay, first question: is he entitled to possess? Entitled to receive. Two words should come to your mind. Entitled to possess? Yes, lawfully only he obtained the check. Entitled to receive? No prohibition. Yes, he is entitled to possess, entitled to receive. Therefore, he is a holder. Correct? Gift it is not illegal, pa. Gift is not illegal. Gift is very much legal. Yes or not? Okay, so he is a holder, but he is not a holder in value. He is not a holder in due course. He is not a holder in value, holder for value. He is not a holder in due course. Are you all following this discussion, my dear intelligent students? Shall we progress? Okay. A, the payee of the check, who is prohibited by a court order from receiving the amount of the check. He is prohibited by the court order from receiving the amount of the check. He is prohibited by the court order. Which means what? Come on, tell me. Is he entitled to possess? Yes, entitled to possess. Is he entitled to receive? No entitlement to receive. So, not entitled to. No entitlement to receive. Therefore, he is not a dash holder. Simply, I will tell you something. If you are not a holder, you cannot be a holder for value. You cannot be a holder in due course. Correct? He is not a holder for value, not a holder in due course. Mr. M, who finds a check payable to bearer on the roadside and retains it. You took it from the roadside. Now tell me whether you will get valid title. Did you lawfully obtain the instrument? Did you properly obtain the instrument? No. Road la aate potadala, it does not mean that you have lawfully obtained the instrument. But there is no entitlement to dash. There is no entitlement to possess. There is no entitlement to possess. Therefore, this fellow is not a holder. He is not a holder for value. He is not a holder in due course. Clarity is there. Mr. B, who steals a blank check of A and forges A's signature. Mr. B, who steals a blank check of A and he forges A's signature. In the case of forgery, nobody will get title. Therefore, he is no entitlements, because as it is forged. Are you all following up? Everybody? So, what is that we have discussed? We have discussed who is a holder for value, and who is a holder in due course. Who is a holder? Holder means he should have entitlement to possess the instrument, entitled to receive the instrument, plus consideration holder for value, plus before maturity and in good faith you call him as a holder in due course. Clarity is there. Shall we progress, everybody? Now, a holder in due course will get a good title than the transferor, except in the case of not negotiable crossing and forgery. A holder in due course will get a better title than the transferor, and all the prior parties are liable to holder in due course. Are you all following this discussion, everybody? Shall we? Right. Okay. Negotiation. What is meant by negotiation? Try to remember this statement where an instrument is transferred to any person so as to make him the holder of the instrument. Where an instrument is transferred to any person so as to make him the holder of the instrument. Transferred to make him the holder. Where an instrument is transferred to any person to make him the holder of the instrument, then it is called as dash. This is called as, negotiation. It is called as negotiation. Don't get confused between a negotiation and an endorsement. Examination in the doubt varum in examination. That is the beauty of examination. Now closely follow. If an instrument is transferred to any person so as to make him the holder of the instrument is said to be negotiated. See, negotiation, how to do negotiation depends upon the type of the instrument. Just a minute. Right. It depends upon the type of the instrument, children. So, the type of the instrument can be classified into bearer instrument and order instrument. Bearer instrument, nothing is mentioned. Bearer instrument is like your cash. How will you transfer cash to some other person? Okay, you will not write endorsed so and so. Okay, please pass me the examination. இதெல்லாம் எழுதுவான் இந்த கேஷ்ல. இதெல்லாம் you are not supposed to write. அப்ப cash how do you transfer it to the other person? By mere delivery. Cash how do you transfer it to the other person? By mere delivery. By just delivery. Whereas if name is mentioned na, then there should be endorsement and delivery. Endorsement plus delivery, two steps put together is the process to achieve the end called as negotiation. Merely if you endorse but there is no delivery, if there is an endorsement but there is no delivery, this is a very popular question in the examination. Mr. So and so endorsed, kept it in the safe locker, and then paparappa margaya died. To whom he endorsed, that fellow is claiming that he is the owner of the instrument. What should be your answer? No, he is not the owner of the instrument, because the instrument is not negotiated, because the instrument has only been endorsed. Endorsement plus you should hand it over to the other person, only then it can be called as negotiated. Only then it can be called as negotiated. Are you all following this discussion, everybody? My dear children, shall we progress? Everybody. Then, rules of endorsement. Very, very important, this rules of endorsement. An endorser is liable to all the subsequent parties. Endorser is liable to all the subsequent parties if he receives notice of dishonor. Only if he is intimated, boss, that the instrument got dishonored, only then the endorser is liable to all the subsequent parties. Else he is not liable to the subsequent parties. Are you all following? Then, and he is liable for both the instrument amount as well as for the expenses amount. When is the endorser not liable? There is a concept called as negotiation back. There is a concept called as negotiation back. Okay, so for people who have already studied, this should be easy. For people who have not studied, I'll try explaining this quicker once. Just quicker, try to recollect it once. Before that, rules of endorsement. An endorser is liable to all the subsequent parties if and only if he receives notice of dishonor. An endorser is liable to all the subsequent parties if and only if he receives notice of dishonor. Next point to be understood is that and he is liable both for the expenses amount as well as for the instrument amount. Now, closely following negotiation back, the intermediate parties are not liable, which means what? It goes like this. How does that go? A gave the instrument to B, B to C, C to D, D to E, E to C. Now, this is called as negotiation back. What is called as negotiation back? Where the endorser becomes the endorsee. The endorser, he becomes the endorsee. If the same endorser subsequently becomes the endorsee of the same instrument, then it is called as negotiation back. Then it is called as, come on, negotiation back. Next point to be understood, in the case of negotiation back, the intermediate parties are not liable. Why? C will hold E liable, E will hold D liable, D will anyways hold C liable again, C will again hold B liable. Idhukku parthi mutta godownliye irukkalam, C can directly hold B liable. Correct? Adanala in the intermediate endorsers are not liable. Right? You all agree to this? Everybody, shall we progress? So, what is that we are discussing? We are discussing what is meant by negotiation, where the instrument is transferred to a person with a view to make that person the holder of the instrument. The instrument is said to be negotiated. Bearer instrument, mere delivery. Order instrument, endorsement and delivery. Endorsement and delivery. Endorsement and delivery. Rules of endorsement: an endorser is liable to all the subsequent parties, not only on the instrument amount but also on the expenses amount if he receives notice of dishonor. And intermediate endorsers are not liable in the case of negotiation back. Right? Right. Types of endorsement. The first endorsement is full endorsement. What is meant by full endorsement? We have both the name of the endorsee plus the signature of the endorser. Complete endorsement. Pakka. No, name of the endorsee is also there. Signature of the endorser is also there. This is called as full endorsement. Blank endorsement. Only signature of the endorser is present. Name of the endorsee is not there. Now, the name of the endorsee is not there. Now, the instrument now becomes a bearer instrument. Just a minute, there is a typo error here. The instrument becomes a dash instrument. The instrument becomes a bearer instrument. The instrument becomes a bearer instrument if there is going to be no a blank endorsement. Next, in the case of restrictive endorsement, where we are restricting the further negotiability of the instrument, I will tell you something. If I make a not negotiable crossing, the instrument is still negotiable. If I make a not negotiable crossing, the instrument is still negotiable, only that the transferee will get only the same title as the transferor. Correct? But if I make a restrictive endorsement, after that you cannot make further endorsement. Restrictive endorsement is the last endorsement. Restrictive endorsement is the last endorsement. Everybody? Right. Sans recourse. Sans means without, recourse means coming back. I will endorse, don't come back to me. It is called as sans recourse endorsement. Endorser excludes himself from the liability towards the subsequent parties. It is called as sans recourse. Endorser is telling I will endorse. Somebody else gave me the instrument in my name. I am now endorsing it to you. But tomorrow if the instrument is getting dishonored, don't come and ask me. That is called as sans recourse endorsement. Are you all following? Even though you are a holder in due course, you cannot hold a party liable if he has given a sans recourse endorsement. If a party has given a sans recourse endorsement, you cannot hold him liable even though you are a holder in due course. Even though you are a holder in due course. Friends, are you all following this discussion? Everybody, shall we progress? Right. If there is going to be a sans recourse endorsement plus negotiation back, the intermediate parties are liable. Now, I will come to this illustration. Paki. ஒழுங்கா செலக்ட் பண்ற மாதிரி இருந்தா அப்படியே செலக்ட் பண்றோம்ல. சரி. இப்போ கவனி. Just listen. A to B, B to C, C to D, D to E, E to C. This is what we discussed, correct? Imagine C makes a sans recourse endorsement. Which means when C gave to D, he told clearly to D, tomorrow if this instrument is getting dishonored, don't come back to me. Again it is going to E. Again it is going to C. Now what will happen? E and D, they are liable. E and D, they are liable to whom? They are liable to C. E and D, they are liable to C. Because in the case of negotiation back, plus if there is going to be a sans recourse endorsement, the intermediate parties are liable. C can hold E liable, E can hold D liable, D again cannot hold C liable. Therefore, we are telling E and D are liable. First, what we told, if there is no sans recourse endorsement, C will hold E liable, E will hold D liable, D will again hold C liable, and then C will hold B liable. Therefore, we told that C can directly hold B liable. But if C has made a sans recourse endorsement, E and D cannot hold C liable. Therefore, C can hold E and D liable. Are you all following this discussion? This is one difficult discussion. You may also get this question, but okay, if you find it very difficult at this moment, so kindly leave it. So what is meant by sans recourse endorsement? Where the endorser, he disclaims his liability on the instrument, he gives up his liability on the instrument. It is called as dash endorsement. It is called as sans recourse endorsement. It is called as sans recourse endorsement. Clarity is there? Then sans phrase is as good as the sans recourse endorsement, but the party says I am not liable on the expenses amount. I am liable on the instrument amount, but I am not liable on the expenses amount. Facultative endorsement, endorser says I don't want notice of dishonor. Endorser says I don't want notice of dishonor. He waives his right to receive notice of dishonor. Conditional or contingent endorsement, if the endorsement is made with certain conditions, it is called as conditional or contingent endorsement. Quickly, now partial endorsement I have not taken up for discussion because there is nothing called as a partial endorsement. You cannot partially endorse an instrument. Okay, you cannot partially endorse an instrument. Appa 1000 rupees instrument, 500 rupees alone you cannot endorse. So to quickly consolidate, what are all the different types of endorsements which we discuss? Number one, so we discussed the rules of endorsement. Endorser is liable to all the subsequent parties only if he receives the notice of dishonor. But in the case of negotiation back, the intermediate endorsers are not liable. So different types of endorsement. Full endorsement, name of the endorsee is there, signature of the endorser is there. Blank endorsement, name of the endorsee is not there, signature of the endorser is there. The instrument becomes a barren instrument because name is not mentioned. Then restrictive endorsement, that is the last endorsement where I restrict the further negotiability of the instrument. It is called as restrictive endorsement. Number 4, it is sans recourse endorsement. I am endorsing, but I am not liable on the instrument. That is called as sans recourse. Beauty of sans recourse is intermediate parties are liable. Sans phrase endorsement, I am endorsing, but I am not liable on any expenses amount which may come. Expenses amount, what may come? Something like noting charges, etc. may come. For that expenses amount alone, I am not liable. Contingent endorsement or conditional endorsement, endorsement with conditions. If those conditions are satisfied, it is a valid endorsement. If those conditions are not satisfied, it is not a valid endorsement. Okay, everybody. Okay, facultative endorsement, the endorser is telling I don't want right to receive, no, I don't want notice of dishonor. I don't want notice of dishonor. I don't want notice of dishonor. Right. Next, types of negotiable instruments. Okay, the first one is inland instrument and foreign instrument. What is an inland instrument? Basically, the first condition is that the instrument should be drawn in India and it can be made payable in India or it can be payable by a person resident in India. Number one, the instrument should be drawn in India and the instrument can be payable in India or it can be payable by an Indian resident. So, this is a mandatory condition. This is the mandatory condition that the instrument should be drawn in India. Either of these two conditions are to be satisfied, optional. Either this condition or this condition is to be satisfied. This is optional. Okay. If this is satisfied but this is not satisfied, no problem. Or on the other hand, if this is not satisfied and if this is satisfied, no problem. But if this is not satisfied, then no, that takes away no the very essence of the instrument as a no inland instrument. So instrument should be created in India, plus the instrument should be payable in India or it should be payable by an Indian resident. Inland instrument. Any instrument other than inland instrument is a foreign instrument. I am proceeding. Hey, are things going into your head? No, because it is no after a day-long examination. But why did I choose today? Because today, no, at least this you can listen, and then no, it's a guided listening process. It will be of some help to you rather than no you yourself trying to study. If you yourself try to no study konjam tired irkom, plus all these no the relative nonsense will call today. How did you do the examination? How did you do the examination? All friends, relatives la dukkam visarikum. Anala gammunu pesama vandu you tell I have class, so therefore better. Super. Seri. If you have done today's examination brilliantly, if you have done today's examination moderately, if you have done today's examination very badly, forget all those things. Your focus should be on next examination. No point, no thinking what has happened. Your focus should be on next examination. So next examination, we will know make up what was done in the what was lacking in the previous examination. We'll do even better than what we did in the previous examination. So in either case, next examination is more important. Yeah. Right. Right. Ipo, the instruments can be classified into two. It can either be a demand instrument or it can be a time instrument. What is meant by demand instrument? If the instrument specifically it is mentioned that the instrument is payable on demand. Number one, check is always payable on demand. Correct? We already know check is payable on demand. No time is mentioned. Like this one question may come. Mr. X promised to pay Y. Mr. X gave a promissory note of rupees 1 lakh to Y. No time was mentioned. After 3 days, Mr. Y demanded the amount from X. X should pay. No grace days, nothing. This is a demand instrument. If the time is mundama irundadana, then it is a demand instrument. Every name mundama irunda barrier instrument. Every name is not there, it is a barrier instrument. If time is not mentioned as to when the payment will be made, it is a dash instrument, my dear children. It is a demand instrument. Are you all following? Then after maturity, all the instruments they are demand instrument, and if we have used the words the instrument is payable on demand, at sight, on presentment, all these are dash instruments, they are demand instruments. So 3 instruments we can call it as demand, 4 instruments in fact, no, where the instrument is expressed to be payable on demand, or no, the instrument is the time is not mentioned. If time is not mentioned, maybe inchoate instrument, some conclusion you may try to draw. Don't do all those things. If time is not mentioned now, it is still a valid instrument. If time is not mentioned now, it is still a valid instrument. The only point is that no, it becomes a demand instrument. So after maturity, all time instruments are demand instrument, and if the instrument is expressed to be payable, no, at sight, on presentment, on demand, the instrument should be regarded as demand instrument. Shall we progress? Time instrument, the instrument which is payable on a specified day, after some specified period, after some fixed period, then you call it as a time instrument. Mandatorily in the case of time instrument, 3 grace days are available as a matter of right. The main distinction between a demand instrument and time instrument is that in the case of demand instrument there is no grace days, whereas in the case of time instrument 3 grace days are available as a matter of right. 3 grace days are available as a matter of right. Okay, so this is a very frequently tested question in the examination. You should be knowing how to count using your fingers. That's all. Okay, don't show any hesitation in the examination. Ayyo, if I show the fingers and if I count pakatla irukkavan, he will think I am a small boy. Let him think anything. Let him think anything. We are not bothered about what he is going to think. We are more bothered about what our examiner is going to think. Correct? And Mari Bragaspati Mari, if somebody is thinking na next time also they will come in the same examination hall, but Nama Getta we will go to the next level, CA final level. Amma Vekatha vidu verala vidu. பக்கத்தில் இருக்கிற எஸ்எல்இ ஸ்மார்ட் லேர்ன் ஸ்டூடெண்ட்னா அவள் இன்னும் பிரச்சனையே இல்லை, 2 பேர் சேர்ந்து விரல விட்டுக்கலாம். உன் விரல மட்டும் என்ன ஆனா ரைட். Date of the instrument should be excluded in counting that. Sorry, then you know this normal thing, that is what if that day happens to be a declared public holiday, emergency public holiday. I have not included that because that is too rudimentary a matter to be included here. So the emergency public holiday na, then the succeeding business day. Emergency public holiday na succeeding business day. Succeeding day nu mottaya ezhudada, succeeding business day. If it is a declared public holiday na, the preceding business day. One very important point, no, drill this down into your brain. Wherever Companies Act holiday is coming, it is national holiday. Negotiable Instruments Act holiday is coming, then it is a public holiday. Everybody, Negotiable Instruments Act uses the word public holiday, Companies Act uses the word national holiday. Sir, anyways holiday no abdin solli ezhudinena. Right, okay, so select words, no, you should be used. There is a big difference between public holiday and national holiday. Independence Day, Republic Day, Gandhi Jayanti are only national holidays. Sunday, Ramzan, Pongal, Easter, OC biryani, OC cake, OC bakshano ennikkalam kadakkartho adella public holiday. Right? Bearer instrument, the instrument which is expressed to be payable to the bearer, or in which the last endorsement is a blank endorsement, is a bearer instrument. Order instrument which is payable to or to the order of a specified person. Trade bill, for settling a trade obligation. Accommodation bill is to financially accommodate a party. You supplied me goods, I am accepting the bill. Trade bill. You need money, I need money, we both draw bill of exchange on each other. It is called as accommodation bill. Clean bill, no documents are attached to the bill. Something is written on the bill. Don't think clean bill na nothing is written, don't write. Okay, so clean bill na something is written, it's a proper bill, but what happens in that bill is that no documents are attached. Documentary bill na some documents are attached to the instrument, that is called as documentary bill. Friends, are you all following? Right? Sorry. Okay, the time is 8. We will take exactly 5 minutes break. Okay, break is not for you, break is for me. Okay, I want to just give some space for my throat. We'll take just 5 minutes break and we will join, and when we join we'll complete the Negotiable Instruments Act in full. Right? Thus mark, followed by that we will start with Indian Contract Act also. Good. YouTube students also, please stay back. We'll join soon. வந்துட்டேன். Right. So comes the difficult types of bills. Three slightly confusing types of bills is what I am going to cover now. Escrow bill. Very simple with respect to escrow bill. Everything signed, everything done, delivered. But when you are delivering, you are putting a condition. No condition on the instrument. Separately, you are putting a condition. You should use this instrument only when these conditions are violated. So I give a bill saying that, okay, I promise to pay Mr. Suman a sum of rupees 3 lakhs after 3 months. I have signed a bill and I handed over to Suman, and I am telling to Suman, only if I don't fulfill my contract, you should use this bill. This is called as an escrow bill. Escrow itself means conditional. Escrow itself means conditional. Which means now I am liable only if the conditions are not met. I am liable only if those conditions are not met. I am liable only if those conditions are violated. I am liable only if those conditions are violated. If those conditions are not violated, then I am not liable. If those conditions are not violated, then I am not liable. However, a holder in due course still gets a good title. I give it to Suman saying that you should use this bill only if these conditions are not satisfied. Those conditions are not satisfied, but Suman silently endorses it to a holder in due course. Holder in due course will get a good title. So we stick on to our normal statement. Nobody can question the validity of the title of holder in due course. Nobody can question the validity of the title of the holder in due course. Everybody know they are liable to holder in due course, except in those exceptional cases such as forgery and not negotiable crossing tavara. In all the other cases, the holder in due course, nobody can question, nobody can deny their liability to holder in due course. Inchoate means an incomplete instrument. So it is incomplete plus it is signed. Not even signed, it is completely incomplete. No, we are not even referring that to as an instrument. So where the instrument is signed and the other details are either wholly or partially incomplete, you call it as inchoate. In the case of inchoate instrument, the holder can fill an amount which is intended to be transferred. Holder in due course can fill an amount not exceeding the amount covered by stamp duty. The holder can fill an amount which is intended to be transferred. The holder in due course can fill an amount not exceeding the amount which is covered by the stamp duty. Not exceeding the amount which is covered by stamp duty. Are you all following? Ambiguous, where an instrument could be treated either as a promissory note or as a bill of exchange, it is called as, ambiguous instrument. Generally, ambiguous instrument will come where the drawer and drawee, they are same persons. Where the drawer and drawee, they are same persons. Quickly, I will help you out with an illustration very, very quickly. Say for example, there is Chennai division, there is Mumbai division of A Limited. Chennai division draws a bill of exchange on Mumbai division and it is accepted by the Mumbai division. Now who is the drawer? Chennai division is the drawer. Who is the drawee? Mumbai division is the drawee. Who is the acceptor? Mumbai division is the acceptor. So here the drawer is the Chennai division, the drawee is the Mumbai division. All these divisioning is only within A Limited. Now this Chennai division, imagine this Chennai division is endorsing this instrument. The Chennai division endorses the instrument to a third party, Mr. Z. If it endorses the instrument to a third party, Mr. Z, as far as Mr. Z is concerned, Chennai division, Mumbai division, everything is one and the same. Everything is one and the same. As far as Z is concerned, Chennai division, Mumbai division, everything is one and the same. So A Limited is the person who created the instrument. A Limited is the person who created the instrument, and A Limited is the person on whom the instrument is liable. A Limited is having liability. If you create the instrument and if you are liable to pay on the instrument, that instrument is called as promissory note. Correct? If you create the instrument and if you are liable on the instrument, that instrument is called as promissory note. So therefore, now Z can treat this instrument either as promissory note. Z can treat it either as promissory note, or he can also treat it as bill of exchange. Why is that he can treat it as bill of exchange? Because the nature of the instrument is that of bill of exchange. Why can he treat it as bill of exchange? Because the nature of the instrument is that of bill of exchange. Where if the if the instrument, come on, if the instrument, if in an instrument the drawer and the drawee, if they happen to be the same person, if in an instrument the drawer and drawee, if they happen to be same person, then it is called as dash instrument, it is called as an inchoate instrument. If the drawer and drawee, if they are same person, it is called as an inchoate instrument. Are you all following? Right? So if the drawer and drawee, they happen to be the same person, then you call it as an ambiguous instrument. Then you call it as, come on, ambiguous instrument. Are you all following, everybody? If you are listening this for the first time and if you feel this is somewhat going over your head, no, don't try much, let that be. Okay? Acceptance. So this is a special thing which is applicable only for bill of exchange. You don't accept a check, you don't accept a promissory note, you only accept a bill of exchange. What is meant by acceptance? Acceptance means the drawee, he is indicating his assent to the order of the drawer. It is called as acceptance. The word acceptance is optional. You may use the word acceptance or you may not use the word acceptance. Rules of acceptance: number one, it should be signed. Number two, no, it should be on the instrument, which means it should not be on the launch. It should be on the instrument. Number three, it should be completed by delivery. Accept pani jobi la vechirundha, it is not an acceptance. Acceptance should be completed by delivery. Oh, mic isn't proper, is it? Korakora coming now also. ரொம்ப வருதாப்பா கொரக்கொர? now okay வா? okay, லைட்டா வருதா? லைட்டா கம்மிங்கா? ஓ, ஏன் தெரியலையே. once I will switch it off and on, just no, tell me. It is taking some time to settle maybe. பக்கா? ஓகே. நோ கொரக்கொரவா? சரி. கொரக்கொரன்னு ஒருத்தருக்கு பதிலாக கரக்கரன்னு வந்தால் மட்டும் என்ன, நான் பேசுறது கரகர பிரியா மாதிரியா இருக்க போகிறது இல்லை. ஸோ சரி, ஓகே சரி, ஓகே ஓகே, ஒரு ஃப்ளோவில் சொல்லிட்டேன். ரைட், ஓகே. யூடியூப் ரைட். இப்போ ஓகே, ஃபன் அப்பார்ட் ரைட். இப்போ மொக்க கேட்கலையா, புரியலையா? ரெண்டும் ஒன்று தான், பரவாயில்ல விடு. டே, இன்னைக்கு கூட யாரா விக்ஸ் டேப்லெட் சாப்பிடுங்க, கிச் போங்கன்னு அநியாயத்துக்கு மொக்க போடுறீங்கடா டே. சரி, ஓகே. ஸோ இப்போ the holder should give maximum how much hours to accept. He should give more, not more than 48 hours to accept. If he is going to give more than 48 hours to accept, if the holder is going to give more than 48 hours to the drawee to accept, he should get the consent of the prior parties. He should get the consent of the prior parties. Are you all following? If he is going to give more than 48 hours for acceptance, he should get the consent of the prior parties. If he is not getting the consent of prior parties, without the consent of prior parties, if he is going to give more than 48 hours for acceptance, then the prior parties are discharged. Similarly, where there is going to be a qualified acceptance also, you should get the consent of the prior parties. If you are not getting the consent of the prior parties for a qualified acceptance, the prior parties are discharged. Next question: what is meant by qualified acceptance? Qualified acceptance means you agree saying that it is payable at a different time or at a different place or a different amount, or you have accepted subject to some conditions. Different time or different place or different amount, or you have accepted subject to some conditions. Which means the bill I have told, no, after 3 months I direct you to pay a sum of rupees 10 lakhs at Chennai. You are telling accepted not at Chennai but at Mumbai. This is qualified acceptance. Okay, or after 3 months you are telling no, after 6 months. This is a different time, a different place. Or 10 lakhs you are telling accepted for rupees 8 lakh, different amount. or subject to some conditions. Accepted if the goods are delivered properly to me. Accepted subject to some conditions. A qualified acceptance is valid provided you get the consent of all the prior parties. If you don't get the consent of the prior parties are discharged. If you don't get the consent of prior parties, the prior parties are discharged. Are you all following, everybody? Intelligent students, shall we progress? Everybody? Right. Now, special provisions in the case of check. See, liability of parties. No parties to the instrument, minor, legal representative companies, ignore. Okay, so special provision with respect to check. When will the bank dishonor the check? If the check is not dated. Three things related to dating. What are the three things related to dating? Check is not dated, or it is a post dated check and it is presented for no payment before such date, or no, if it is going to be no presented after its validity period. If it is presented after its validity period. What is validity period? That is 3 months. What is validity period? That is 3 months. So if it is presented after your validity period, right? I should still align somewhere. What is the validity period? The validity period is, come on, 3 months. The validity period is, come on, 3 months. Are you all following, everybody? Right. The validity period is 3 months. See, closely follow a simple logic. I will tell you what is the difference between validity period and maturity period. Within validity period, the check should be encash. After maturity period only, you can encash a promissory note or a bill of exchange. Check there is no maturity period. Check there is only a validity period. Validity is the maximum period. Maturity is the minimum period you should wait. After maturity period only, you can claim the amount for promissory note and bill of exchange. And there is no concept called as maturity period in the case of check. Check only carries a validity period. What is the validity period of check? The validity period of the check is 3 months. Or where if the garnishee order is received from the court. Garnishee order means freeze order is received from the court. Garnishee order is nothing but, come on, freeze order is received from the court. Or if the check is mutilated or torn, or if it contains material alteration, or there is going to be a drawer signature mismatch, or if there is going to be insufficient funds, or if the banker receives notice of death, insolvency, insanity, physical death, no financial death, mental death. So death, insolvency, insanity, or countermanding payment. Countermanding payment is nothing but stop payment. What is meant by countermanding payment? It is nothing but stop payment, or there is going to be closure of account. So you give the check and you go to the bank, boss, we will close the account. You are closing the account. Obviously the check will get dishonored. So what are all the circumstances? Three things with respect to dates. It is not dated, dated and you are presenting it before the date, dated and you are presenting after its validity date, or there is insufficiency of funds, or there is garnishee order, or the check is mutilated or torn, or the check contains material alteration, or if the bank receives this, no notice of closure of account, insanity, insolvency, death, stop payment. Okay. Now, what is the liability of the drawer? What is the liability of the drawer? See, if the check is going to get dishonored, because of what reason is it going to get dishonored? It is getting dishonored because of insufficiency of funds. This is again a very key area, a very important area, my dear friends. Now, if the check is going to get dishonored, I will also write the section number here, section 138. In the section number mattum memorize. Keep in mind the section number. If the check is going to get dishonored because of insufficiency of funds, then no fine will be levied. How much fine? Twice the amount of the instrument, or imprisonment up to 2 years, or both. Mistake which you may make is that fine of 2 times of the instrument, imprisonment of 2 years is wrong. I will look for this word up to, fine up to 2 years. See, up to twice the amount of instrument, imprisonment up to 2 years. Up to refers to maximum period, that's all. Up to refers to maximum period, that's all. Right? Or both. And it should have been dishonored for insufficiency of funds, and the instrument should have been drawn for a consideration. So what are all the conditions for dishonor of check? For that, when can we hold the drawer liable? The instrument is drawn the instrument is dishonored because of insufficiency of funds, the instrument is drawn for a consideration and the suit is filed within the time limits. What is the time limit for filing the suit is the next page of discussion. If these conditions are satisfied, you can initiate an action against the drawer, and punishment for the drawer will be 2 times of the instrument, up to 2 times of the instrument, or up to 2 years of imprisonment, or both. What is the time limit? What is the time limit? So the time limit starts this way. The receipt of information about dishonor by holder. The holder is receiving the notice of dishonor from his bank. I am depositing the check. I am the holder of the check. I get an information about dishonor. The moment I get the information about dishonor, within the next 30 days, I will intimate. Just a minute. Niache. Okay. So G Boomba came back. I will intimate the drawer about the dishonor, and I will give one more opportunity to the drawer to make the payment. Then only I will file a suit. So idukla some time limits are given. In the time limits you should be very cautious about. So you deposited the check, you got information about dishonor. From there within 30 days you will intimate the drawer about dishonor. From there within 30 days you will intimate the drawer about dishonor. And then you will give him one more opportunity. You will give him one more opportunity. What is that one more opportunity? 15 days opportunity you will give him, okay, to make the payment. If he is not paying within that 15 days, that one more opportunity is over. From there within 1 month you will file a suit in the court of law. You will file a suit in the court of law. You gave me check, I deposited the check, my bank told me the check got dishonored. From there within 30 days I will tell you, and then I should wait. I should give you 15 days time to make I should give you one more opportunity to make the payment. If you don't make the payment within that 15 days, then from there within the next 1 month I will file a suit in the court of law. Are you all following? Everybody? Once more, I deposited the check, I got information from my bank that the check got dishonored. From there within 30 days I will inform the drawer. I will give one more opportunity. One more opportunity I will give for how many days? 15 days. I will give one more opportunity to the drawer. And if the drawer is not making the payment, from there within the next 1 month, I will file a suit in the court of law. Everybody? And in the case of companies, who is liable? The person in charge is liable. In the case of company, the PIC is liable. In case of companies, the PIC is liable. PIC is what? Person in charge is liable. Person in charge is liable. Which court? Which court? Very simple. If it is deposited through the payee's bank account, if it is deposited through the payee's bank account, the court which is having control over the branch of the bank where the payee is maintaining account. So I give a check to you, you deposit it in your bank falls under which court jurisdiction? That court you will file a suit. You are having an account in, say for example, Nungambakam. So Nungambakam, under which court it falls, Nungambakam, in that court you will file a suit if the check is deposited in your account. If the check is not deposited in your account, in other cases means mostly where if the check is collected across the counter, then where the drawer's bank branch jurisdiction, the court having jurisdiction over the drawer's branch bank. Dravi bank na muikada. Drawer or bank is the Dravi bank. Drawer's bank is the Dravi bank. Hey, are you all following up? If I am having an account with State Bank of India, I am the drawer. State Bank of India is the Dravi. Always in the case of a check, the Dravi is a banker. The Dravi is a banker. Correct, apa? So, if the payee deposits in his account, the court which is having jurisdiction over that branch where he is having an account is the relevant court. If he is not going to deposit, if he is going to collect it across the counter, and the drawer's bank where in which court he is having jurisdiction on the court. Are you all following? So this is the liability of the drawer. So liability of the drawer is liable for dishonor of check if there is going to be insufficiency of funds. I give a check to you, and if the check is getting dishonored, I am liable to you. With respect to what? For insufficiency of funds, I am liable. Number 2, the check should have been drawn for a consideration, and the check should have been presented. The case should have been filed within that time limit. What is the time limit within which the case should have been filed? I receive notice of dishonor, that is, the holder receives the notice of dishonor, and from there within 30 days he should intimate to the drawer. He should give one more opportunity to the drawer to pay within 15 days. If he is not paying within that 15 days, then suit should be filed within the next 1 month. Suit should be filed within the next 1 month. ஏற்கனவே இது அமுச்சு கொடுக்குறமா அது அப்படியே நட்ரு தான் பண்ணோம். You should just know by heart that. Now, what is the liability of the paying banker? My dear children, please read this with utmost attention and caution. When is the paying banker liable and when is the paying banker not liable? The paying banker is liable. The paying banker is liable when the payment is made out of due course. The paying banker is not liable if the payment is made in due course. The paying banker is not liable if the payment is made in due course. What is meant by payment made in due course? Number 1, the payment is made as per the apparent tenor. Number 1, the payment is made in good faith and without negligence. Apparent tenor means direction, that's all. And no grounds for suspicion. There is no grounds for suspicion. So we are almost on the verge of completing the negotiable instruments. Okay, the apparent tenor means the payment is made as per the apparent tenor means apparent direction, and it is done in good faith and without negligence means, and then the next condition is that there should be no grounds for suspicion. If these conditions are satisfied, it is called as payment in due course. If the paying banker makes the payment in due course, then the paying banker is not liable. Clarity is there. Similarly, if the endorser sign is forged, the paying banker is not liable. If the endorser sign is forged, the paying banker is not liable. When is he liable? If the drawer sign is forged, he is liable. Or if the payment is made out of due course, that means these conditions are not satisfied. Now you call it as payment out of due course, or there is going to be a wrongful dishonor of check. What is meant by wrongful dishonor of check? Wrongful dishonor of check means I have balance in my account, but you are incorrectly you are declining the payment. Incorrectly you are dishonoring the payment. That is called as wrongful dishonor. Upon 3 circumstances, the paying banker is liable. If the payment is made out of due course, or if the drawer sign is forged. Number 3, wrongful dishonor of check. These are the only circumstances under which the paying banker is liable. Clarity is there? Sorry. Collecting banker. The collecting banker is not liable. When is the collecting banker not liable? Where if the collecting banker is acting as an agent for the customer and acts in good faith and the instrument is crossed. So be very, very cautious. If the instrument is not crossed, then the collecting banker is liable. If the instrument is not crossed, then the collecting banker is liable. If the instrument is crossed, then the collecting banker is not liable. I am only collecting. I am collecting as whom? As an agent for my customer, and I should act in good faith. And before the instrument comes into my hands, the instrument should have been crossed. Before the instrument comes into my hands, the instrument should have been crossed. Are you all following this discussion? Everybody, shall we progress? Right, discharge. Discharge can be classified into 2. It can be a discharge of instrument or it can be a discharge of the party to the instrument. Discharge of the instrument, the party who is primarily liable is discharged, which means the maker of the promissory note is discharged. The acceptor of the bill of exchange is discharged. The drawer of the check is discharged. That is called as discharge of the party primarily liable in instrument. If party primarily liable is discharged, all the parties are discharged. All the parties are discharged. Number 2, discharge of party to the instrument means one or more parties alone they are getting discharged. That is called as discharge of party to the instrument. Okay. I have given a few things alone here. Here itself I will give you an example for discharge of party to the instrument. Example is, come on, sans recourse endorsement. What happens in the case of sans recourse endorsement? In the case of sans recourse endorsement, endorser endorses A, B, C, D. C alone makes a sans recourse endorsement, which means A and B are liable to D, but C alone is not liable, which means all the parties are not discharged. One or more parties alone are discharged. This is called as a discharge of party to the instrument. Are you all following? Right. So when and all the instrument itself will discharge. Everybody, when will they get discharged? If there is going to be a payment in due course, or there is cancellation of maker or acceptor's name by the holder with a view to discharge them. That is, the party primarily liable, his name is struck out. The party who is primarily liable, if his name is struck out, or the maker or the acceptor becomes the holder. That is, there is circuity in action. What is meant by circuity in action? A gives a promissory note to B, B gives it to D, C gives it to D, D again gives it to A. Starting point to ending point, you call it as circuity in action. In between to in between, you call it as negotiation back. Starting to ending, you call it as, come on, it comes back to the starting person itself, you call it as circuity in action. In between, drawer becomes the drawee, you call it as, come on, negotiation back, or by operation of law. So where there is going to be payment in due course, or where there is going to be cancellation of maker or acceptor's name, or where the maker or acceptor, there is going to be circuity in action, or where there is going to be operation of law, under these circumstances and all, what will get discharged? The instrument itself will get discharged. When will the parties to the instrument get discharged? The parties to the instrument will get discharged under the same conditions. Under what conditions will the party to the instrument get discharged? Same like no mode of discharge of instrument, or if the holder is giving more than 48 hours without the consent of prior parties, we discuss the prior parties are discharged. Qualified acceptance assented by the holder without the consent of the prior parties, we just now discussed in acceptance. Yes or not? எடா பரதா இப்பதான் வந்தியா? ஐயோ பாவண்டா. சரி, don't worry, available in YouTube. பார்த்துக்கோ. Then the check was not presented within the time within which it ought to have been presented, and in the meanwhile the banker fails and the drawer is discharged. Banker fails. Now I have already told you, the banker becomes insolvent. The banker becomes insolvent. You make a delay in presenting the check, and no banker, he becomes insolvent. The banker becomes insolvent. Shall we progress? Or the promissory note or bill of exchange, if you have not presented it on the date of maturity, if the promissory note or bill of exchange is not presented on the date of maturity, again no, the parties are not liable. I gave a promissory note to you, I am liable to you. You endorse it to someone, that person endorsed to someone, that person endorsed to someone. The last bloody fellow, he did not present the promissory note for payment to me on time. Now all the other parties are discharged, but I am still liable. Or where there is where there is a material alteration. What is meant by material alteration? Any alteration in the rights and liabilities of the parties is called as dash alteration. It is called as material alteration. I repeat, what is meant by material alteration? Any alteration in the rights and liabilities of the parties, it is called as what alteration? It is called as material alteration. However, there are certain alterations which is permitted by law. Inchoate instrument holder in due course can fill an amount not exceeding the amount covered by stamp duty. Blank endorsement you can convert it into full. Crossing of the check, anybody can cross the check. From normal crossing you can do special crossing. From special crossing you can do account pay crossing. Anything is possible. Forgery. Friends, forgery is a nullity, we know. If no, the party primarily liable, if his signature is forged, then the instrument is void. Find out who is the party primarily liable. If his signature is forged, then the instrument is void. Which means drawer of check signature is forged, instrument is void. Acceptor of a bill of exchange is forged, the instrument is void. Friends, are you all following? Then, if the endorser sign is forged, means the endorsement alone is void. The endorser continues to be the owner. The endorsee will not get the ownership. The endorsee will not get the ownership. Are you all following this discussion? Everybody? Everybody. Right? Fairly I have completed roughly 90 to 95% of the Negotiable Instruments Act. I have ran through 90 to 95% of the Negotiable Instruments Act. I have quickly ran through. So I will just run through. Rohit, yeah. இதே மாதிரி குயிக்காக குடு இந்தியன் கான்ட்ராக்ட் ஆக்ட். யா என்னடா சந்தேகம் உனக்கு தினேஷ்? நீ இன்னைக்கு தான் ஃபஸ்ட் நாள் கிளாஸ் அட்டன் பண்ணுறியா என்கிட்ட? Right. So, though I have mentioned Indian Contract Act, I have covered indemnity, guarantee, bailment, pledge I have covered. Okay. Agency I am not in a position to cover in this file. Okay. Agency alone you make it up. But my dear children, nichayam indemnity or question. Bailment and pledge one question. Agency one question. So 4 into 3, 12 marks roughly. Or maybe 10 to 12 marks roughly from the straight theory questions itself, excluding the MCQs. Excluding the MCQ straight theory questions, you are having that. Okay, shall we? Okay, the first one is, what is this contract of indemnity? What is this contract of, come on, indemnity? So first is definition of indemnity. What is the definition of indemnity? Indemnity is to save a person from loss. Negotiable instruments நிச்சயம் 10 to 12 marks. இதில் ஒரு 10 to 12 marks. ஏற்கனவே ஒரு 40 marks. 40 plus இந்த ஒரு 10, 20 marks. So roughly around 60 marks நம்ம வந்து குடுன்னு we have covered in 6 hours. Okay? Now, what is the contract of indemnity? One party promises to save the other party from loss which is caused by his conduct or by the conduct of third party. Contract of indemnity. Two parties, one is called as indemnifier, the other is called as indemnified or indemnity holder. Come on, what is the contract of indemnity? A contract in which one party promises to save the other party from loss which is caused by the conduct of the promisor or any third party. Which is caused by the conduct of the promisor or any third party. Every contract of indemnity is a contingent contract. Every contract of indemnity, come on, it is a contingent contract. Next. Next. What are the rights of the indemnity holder? He can sue the indemnifier for damages, for cost of suit, and the amount which is paid under a compromise. In the three words, you should know properly, memorize, and you should keep it in mind. What are they? He can sue the indemnifier for damages, the cost of suit, the amount paid under a compromise. The damages, the cost of suit, and the amount which is paid under a compromise. Yes, Sanjay. Right? What is the definition of indemnity? Definition of indemnity: a contract under which one party, come on, a contract under which one party promises to save the other party from loss caused by the conduct of the promisor or any third party. Promisor is called as indemnifier and the promisee is called as indemnified or indemnity holder. What are the rights of the indemnity holder? Number 1, he can claim damages, cost of suit, amount under compromise. Damages, cost of suit, and amount under compromise. Shall we progress? Right. Indemnity over. Then contract of guarantee. What is a contract of guarantee? A contract of guarantee is a contract to perform the promise. A contract of guarantee, it is a contract to perform the promise or discharge the liability incurred by a third person in case of his default. Who gives a guarantee to whom? The surety gives a guarantee to creditor. The surety gives a guarantee to creditor. In respect of what? In respect of the the liability of the principal debtor, which means the third person is whom we call as principal debtor. The person who is giving the surety is called as surety. The person to whom the surety is given is called as creditor. The person to whom the surety is given is called as creditor. So what are all the important points with respect to what are all the important points with respect to surety? There are three parties and there are three contracts. Who are the three parties? The three parties are the principal debtor, the creditor, and the surety. What are the three contracts? The three contracts are one is the contract between the principal debtor and the creditor. One is the contract between okay. One is the contract between the principal debtor and creditor. The other is the contract between the creditor and the surety. And the third is the contract between the principal debtor and surety. This third contract between the principal debtor and surety, it shall be considered as an implied contract of indemnity if it is not express. That is, if this is an express contract between principal debtor and surety, then there is no problem. This is an express contract. But if it is not an express contract, law assumes 145 says that this is an implied contract. That this is an implied contract of indemnity. Simply means what? When surety makes the payment to the creditor, principal debtor should indemnify the surety. Principal debtor should indemnify the surety. Then what is the consideration for the surety? Any benefit for the principal debtor shall be treated as the consideration for the surety. What is the consideration for the surety? Any benefit for the principal debtor. Any benefit for the principal debtor shall be treated as the consideration for the surety. And then the liability of the surety is secondary and coextensive. These are keywords. The liability of the surety is secondary and coextensive with that of the principal debtor. The liability of the surety is secondary and coextensive with that of the principal debtor. Then when is the surety liable even though the principal debtor is not liable? When is the surety liable even though the principal debtor is not liable? Number one, if the principal debtor is a minor or if the principal debtor becomes insolvent. If the principal debtor, is a minor, or if the principal debtor becomes insolvent. Are you all following up? If the principal debtor is a minor or if he becomes insolvent. Shall we progress? So come on, what are all the important points with respect to this guarantee? No, there are three parties. One is called as principal debtor, the other is called as creditor, the other is called as surety. There are three contracts between principal debtor, creditor and surety, and principal debtor and surety. The contract between principal debtor and surety is an express contract. If it is not express, it shall be treated as an implied contract of indemnity. What is the consideration of surety? Anything done for the benefit of the principal debtor is the consideration for the surety. What is the liability of the surety? His liability is coextensive with that of the principal debtor. His liability is coextensive with that of the principal debtor, except in two cases, where if the principal debtor is a minor or where if the principal debtor becomes insolvent. Now, the types of surety, there are two types of surety. Number one is specific guarantee, the other is continuing guarantee. Specific guarantee means a guarantee which is given for a specific transaction is called a specific guarantee. Main point is that it cannot be revoked. On the other hand, continuing guarantee is a guarantee which is given for a series of transactions. A guarantee which is given for a series of transactions. These are keywords. A guarantee which is given for a series of transactions, and a continuing guarantee can be revoked with respect to future transactions. Continuing guarantee can be revoked with respect to future transactions. Clarity is there? Now, discharge. Just a minute. Right. Student, shall we progress? Shall we? இப்போ discharge. How can this discharge happen? Discharge, number one, it can be by the act of the creditor. Number two, discharge can happen by revocation or it can happen by invalidation of contract. Bullshit. Sorry. It can be by an act of creditor or it can be by invalidation of the contract or it can be by revocation. First, revocation. Can I revoke the guarantee which is given? Yes, by giving notice, and in the case of death, revocation will happen, that too only with respect to future transactions, not not with respect to past transactions. Appa a guarantee is already given na, that's all, that is a closed story. The guarantee can be revoked only with respect to future transactions. It can be revoked only with respect to future transactions. Similarly, novation. What is meant by novation? No old surety goes, new surety comes in. Simple. Old surety goes out and new surety comes in. This is called as novation. If in this case, what is happening? The old surety is getting discharged. In this case, what is happening? Come on, my dear children. The old surety is getting discharged. Shall we progress? Then, invalidation of contract is also very simple. Number one, where there is going to be no misrepresentation or concealment of facts. They have hidden some information and then they have got this contract of surety. There is misrepresentation or there is concealment of facts, or the consideration between the principal debtor and creditor fails. The consideration between the principal debtor and creditor fails. If the consideration between the principal debtor and creditor fails, means the contract between the principal debtor and creditor itself is invalid. Therefore, the surety is also not liable. Okay, here. This is the main thing mostly tested in the examination. Any variation in the terms of contract without, W bar O means don't blink, what is that? It is without the surety's consent. Any variation in the terms of the contract without the consent of the surety will discharge the surety with respect to future transactions. Or principal debtor released na, surety is also released. Principal debtor is released either by way of an agreement or by way of an act or by way of an omission. Either by way of an agreement or by way of an act or by way of an omission. Or there is an agreement between principal debtor and creditor for extension of time or not to sue. There is an agreement between the principal debtor as well as the creditor for extension of time or for not to sue. However, if this agreement is between is with the third parties, that will not discharge the surety. So main point is that there should be an agreement between the principal debtor and creditor. Only then the surety will be discharged. However, if that agreement is with the third parties, or there is a mere forbearance to sue not backed by an agreement, there is a mere forbearance to sue, just like that the surety is sitting, like how we were sitting in the last 9 months. I should not tell you, you all have put so much of efforts. For fun, I am just telling, like how generally people used to sit before all the day before examination, 6 months before the examination eppadi irpaalo and mari mere forbearance to sue, not doing anything, chumma they are sitting. That is called as mere forbearance to sue without an agreement. That will not discharge the surety. When will the surety be discharged? Number one, there is an agreement between the principal debtor and the creditor. As a result of that agreement, there is an extension of time or there is going to be agreement not to sue. Only then the surety will be discharged. Or where there is going to be loss of securities. If the creditor had lost the securities given by the principal debtor, that's all. To that extent the surety is discharged. To that extent the surety is discharged. Are you all following? Right. Shall we? Shall we, boys? Shall we, girls? Intelligent students? Shall we? Right. So what are all the circumstances under which the surety will get discharged? The surety will get discharged under the following circumstances. With respect to the act of the creditor, where there is going to be a variation in the terms of the contract without surety's consent, or there is release of the principal debtor, or there is an agreement between the principal debtor and the surety, either for extension of time or not to sue. If that agreement is with the third parties, then it is not to be considered as an discharge of surety. Or if that agreement, through agreement we are not suing, we are just like that not suing, there is a forbearance to sue, then also the surety is not discharged. Where there is loss of securities, there the surety is discharged. About 4 circumstances under which the surety will be discharged: variation in the terms of the contract, release of the principal debtor, agreement between the principal debtor and creditor for extension of time or not to sue, and number 4, loss of securities. In case of revocation, either by notice or debt for future transactions, and by novation and invalidation of contract, misrepresentation or concealment of material facts, or where the consideration fails. Under these circumstances, the surety will be discharged. Okay, what are all the rights which the surety is having? The first right which is having is against the principal debtor, that is the right of subrogation. That is the right of subrogation. What is meant by subrogation? Stepping into the shoes of another person. Temple's law, what happens? Subrogation. Stepping into the shoes of other person. So into whose shoes is he stepping? So he is stepping into the shoes of the creditor. So the surety pays the creditor, now the surety becomes the creditor, or he is having the right of indemnification, Then against the creditor, what right he is having? He is having a right to securities, he is having a right of set off. If there is any receivable payable between the principal debtor and the creditor, or between the surety and the creditor, that can be adjusted. That is called as right of set off. Shall we progress? Co-surety. If the repayment is guaranteed by more than one person, they are called as, co-surety. The liability of the co-sureties are always equal. If the creditor discharges one co-surety, it does not automatically absolve the other co-surety of his liability towards the creditor. If one co-surety is discharged, the other co-surety continues to be liable. And where I am giving a co-surety on a guarantee that only if somebody else is joining as a co-surety, I will also join, and if that somebody else is not joining, then my co-surety is also not valid. So I am giving guarantee to you. If Suman also joins as a co-surety, if Suman is not giving a co-surety, then my co-surety is also not valid. So these are all the points with respect to co-surety. Are you all following up? Bailment. Come on. Bailment. What are all the duties of the bailer and what are all the duties of the bailee? The rights of the bailer and the rights of the bailee. Adukapura pledge. 2 pages I am having. We are going to discuss what is bailment. What is bailment? There are 2 parties in the case of bailment. Who are all the 2 parties in the case of bailment? Number 1 is the bailer, the other one is the bailee. Number 1 is the bailer, the other one is the bailee. Are you all following? Now, what does the bailer do? The bailer, there is going to be delivery of goods for some purpose. There is going to be delivery of goods for some purpose. Bailment is always with respect to movable property, and it is not with respect to immovable property. There is delivery of goods for some purpose, and upon the accomplishment of the purpose, once the purpose is accomplished, the goods will be returned. Once the purpose is accomplished, the goods will be returned. That is what happens in the case of bailment. Are you all following? Now, types of bailment. Gratuitous, non-gratuitous. What is meant by gratuitous? Gratuitous means without any consideration is called as gratuitous. Non-gratuitous obviously it is with consideration. So gratuitous bailment can again be classified into 2. It can be for the exclusive benefit of the bailer, or it can be for the exclusive benefit of the bailee. For example, you are leaving your car in your friend's garage. This is for your benefit, the bailer's benefit. Or you are borrowing a book from the lending library. You are borrowing a book from your friend. This is for your benefit, the bailee's benefit. This is for the bailee's benefit. Okay, so it can be for the exclusive benefit of the bailer or it can be for the exclusive benefit of the bailee. Non-gratuitous bailment, it is always for the mutual benefit of the bailer and bailee. It is always for the mutual benefit of the bailer and bailee. Clarity is there? Okay, what are all the duties of the bailer? Number one, the bailer should disclose the defect and the bailer is liable. If it is going to be a gratuitous bailment, he is liable only for the known defects. If it is a non-gratuitous bailment, he is liable for both the known and the unknown defects. The bailer is liable only for the known defects if it is going to be a gratuitous bailment, and he is liable for both the known as well as the unknown defects if it is going to be a non-gratuitous bailment. And about the expenses, it is always the bailer who will bear the extraordinary expenses, because bailer is the owner, risk lies with the owner, the bailer shall bear the extraordinary expenses. The bailee shall bear the ordinary expenses. Always the extraordinary expenses is for the bailer, the ordinary expenses is for the bailee. Correct? Then, if there is going to be a premature termination of the gratuitous bailment, no, the bailer should compensate the bailee. If there is going to be a premature termination of the gratuitous bailment, the bailer should compensate the bailee. If the bailee has suffered some loss, அதே மாதிரி any loss on account of defective title of the bailer, the bailer should indemnify the bailee. About what are all the things? The bailer should compensate the bailee for any loss which is arising out of the known defects in the case of gratuitous, for known as well as unknown in the case of non-gratuitous bailment. And always extraordinary expenses should be borne by the bailer and the ordinary expenses should be borne by the bailee. Then, if the bailer is going to prematurely close the bailment, then for that gratuitous bailment premature closure, if the bailer has suffered any loss, he should know. If the bailee has suffered any loss, the bailer should compensate. Then, because of the defect in title, if the bailee has suffered any loss, the bailer should compensate that loss. Shall we progress? Everybody? சொல்லுங்கடா இன்டெலிஜென்ட் செல்லா குட்டீஸ், கண்ணுக்குட்டீஸ், யானைக்குட்டீஸ், ஆட்டுக்குட்டீஸ். Right. What are the duties of bailee? Number one, the bailee should take reasonable care. The bailee should take dash care, reasonable care. What is meant by reasonable care? That care which he will take if the goods were his own goods is called as reasonable care. That care which he will take if the goods were his own goods is called as dash care. It is called as reasonable care. Friends, are you all following? Okay. No mixing should be done. Okay, I should not speak about this. No, night 9 o'clock I should not speak about this, but provision is there. No mixing should be done. No mixing can be done. No, with permission you can do mixing. If you are doing the mixing with permission, in the mixture they are entitled for an interest. In the mixture they are entitled for a interest. Mixing, mixture. Edo main dish, main event, side dish nanchikada. So they are entitled for a share in the mixture. If it is mixing without permission, then you should separate and give. If it is not possible, you should compensate the bailer. This is the duty of the bailee. This is the duty of the bailee. Are you all following up? Then, he should not make inconsistent use of the goods. What is meant by inconsistent use of the goods? If you are going to use the goods for a purpose other than which the goods were given, if it is going to be for a purpose other than the purpose for which it was given, it is called as inconsistent use. The contract is voidable at the option of the bailer, which means bailer can terminate and the bailee should return the goods along with accretions. So important points: bailment, delivery of goods from bailer to bailee for some purpose. Once the purpose is over, the goods will be returned back. Types of bailment: gratuitous and non-gratuitous. Gratuitous is without consideration, non-gratuitous is with a consideration. In the case of gratuitous bailment, it can be for the benefit of the bailer or it can be for the benefit of the bailee. Non-gratuitous is always for the mutual benefit of the bailer and bailee. Duties of the bailer and duties of the bailee. Duties of the bailer: to disclose the known defects in the case of gratuitous, liable for both known as well as unknown defects in the case of non-gratuitous. Number 2, to bear the expenses. Extraordinary expenses is always for bailer, ordinary expenses is for the bailee. Okay. Number 3, if there is going to be a premature termination, and because of that premature termination, if there is going to be any loss, that loss who should compensate? Bailer should compensate to the bailee. And then number 4, if there is going to be an bailar's defect in title na, because of the bailee suffering any loss, the bailar should compensate to the bailee. What are all the duties of the bailee? The goods should be taken reasonable care. What care means? That care which the goods which he will take if the goods were his own goods is called as reasonable care. Number 2, no mixing should be done. Number 3, no, you should return the goods along with accretion, and you should use the goods only for the purpose for which it is intended, and you should not use it for any other purpose. Are you all following up? Then what are all the rights of the bailee? What are all the rights of the bailee? Okay, it is simply I have given 2 points here, but do understand whatever is there, the same duties of the bailar is equal to rights of the bailee. Duties of the bailee is equal to rights of the bailar. Like that you will write. Are you all following up? Sorry. Number 1, right to claim remuneration. Number 2, he has a right to exercise lien. What is meant by lien? The right to retain possession is called as lien. This lien can be classified into 2, particular lien and general lien. What is meant by particular lien? If you have exercised the skill and labor over some goods, and with respect to that goods, if the amount is outstanding and that goods you are holding back, it is called as particular goods, particular lien. That goods on which the service is rendered and in respect of which the amount is outstanding, that goods if you hold it back, it is called as particular lien. This is available to all the bailies. Anybody can use exercise particular lien, but general lien, something outstanding is in respect of something, lien is exercised in respect of something, it is called as general lien. This is not available to all. This general lien, it is a lien on a general balance of account which is available to persons like factors, bankers, attorneys, etc. Which is available to persons like factors, bankers, attorneys, etc. Shall we progress? Okay, so the right of the bailee, one of the right of the bailee is to exercise lien. So this lien can be classified into 2. This lien can either be a general lien or it can be a particular lien. What is meant by general lien? A lien on a general balance of account. This phrase you will use. A lien on a general balance of account is called as general lien. What is meant by particular lien? Particular lien, a lien exercised over the goods in which he has exercised his skill and labor and the amount is outstanding. Particular lien is available generally to all the bailies. General lien is available to particular bailies like factors, bankers, etc. Now pledge. What is pledge? Pledge is nothing but delivery of goods as a security. Delivery of goods as a security. But the main difference between bailment and pledge is that bailment, delivery of the goods for some purpose. It can be any purpose. Here the purpose is mentioned. Delivery of goods is only for a security. Delivery of goods is only for a security. 2 parties, pledger and pledgee. Pledge being a bailment. Pledge being a bailment. All the rules of the bailment will also apply to pledge. All the rules of the bailment will also apply to pledge. In addition, what are all the rights of the pani? So you should know, if I am giving my chain to you, I am called as panar and you are called as pani. If I am giving my chain to you, then I am called as panar and you are called as pani. Samjha? Ipo, what is the rights of the pani? Now what is that the pani can do? The pani can exercise lien. The pledgee or pani can exercise lien. Set pasanga can exercise lien. Very simple. So set pasanga can exercise lien. Set pasanga can exercise lien for what? For the debt plus interest plus ordinary expenses they can exercise lien. Extraordinary expenses they can only sue, they cannot exercise lien. Okay, they can no exercise lien for the debt plus interest plus ordinary expenses. For extraordinary expenses they cannot exercise lien. Are you all following? Then the said buyer can sell the goods after giving notice. Excess or shortfall shall be adjusted. Which means what? It is pledged for rupees 2 lakhs and the interest component comes to 2.5 lakhs. So 2 plus 0.5, 2.5 lakhs. It is sold for 3 lakhs abdinal. Balance 50,000 should be handed over to the owner. Principal plus interest comes to 3.25 lakhs and it is sold only for 3 lakhs. Now the owner should pay the said buyer 25,000. Are you all following up? As a panar, what are all the rights which he is having? He is having a right to claim back the goods along with any accretion. Same like what we discussed in bailing. Can non-owners pledge? Nyayama non-owners should not pledge. But there are some circumstances under which the non-owners can pledge. Number 1, a mercantile agent exceeding authority. I gave the goods to my agent for selling purpose. Brahmati, he went and he pledged those goods. Whether this pledge is valid or not, law says that this pledge is valid. If any one of the joint owner is pledging the goods without the permission of the other joint owner, whether this pledge is valid or not, yes, this pledge is valid. Of course, this joint owner can sue the other joint owner, but innocent pledgee, we should not punish as the issue. Then, A person in possession of goods under voidable contract. A person in possession of goods under voidable contract. X sold goods to Y. How did Y acquire the goods? Y acquired the goods by way of fraud. But now Y himself is having a defective title. Do you agree? But if Y is pledging this goods with Z, Y is pledging this goods with Z, who is an innocent person. Oh no, who is a person in good faith? Inge holder in due course ngada. They mokka pisingla. We are not discussing negotiable instruments act. So no, it is, if it is no, here it is in good faith. Na. Now this pledge is valid. Now this pledge is valid. Friends, are you all following? Last, a person having a limited interest in a property. Okay, for example, bike mechanic can pledge the bike to the extent of on the repair value. Now he becomes a person who is having limited interest in the property. He becomes a person who is having limited interest in the property. Now he can pledge the bike to the extent of that repair value. Friends, are you all following this discussion up? Everybody? With this, pledge also comes to an end. So what you should understand, indemnity guarantee 4 marks, bailment pledge 4 marks, agency alone you should add up from your side, which is for another 4 marks. So totally it is for 12 marks. So 12 plus negotiable instruments act another 12. So 12 plus 12 24 plus share capital another 7, 24 plus 7 31 plus accounts audit dividend each minimum 444. So that works around to some 12. So again it works around to some 45 to 47. All these are excluding choices I am telling. What I have discussed is for 70 marks on the denominator, my dear children. Plus deposits is for another 4, correct? Plus meetings is for another 5 to 6. So all these works around to minimum 50 to 60 marks out of 70. All these overlap will be also there in this MCQs, right? So the overlaps will also be there in MCQs. So these areas you revise it once more very thoroughly, and then the balance areas you will get more time to read. The balance areas you will get more time to read. Everybody, right? Thank you, YouTube students. Thank you very much. Thank you, YouTube students. Thank you very much. Thank you, YouTube students. Thank you very much. On the live off pannuppa.